Hello everyone, my name is Sampath. Welcome to my channel. Thank you very much for stopping by. This is the weekly market analysis based on market profile as well as the candlestick pattern view. As always, I stick to analyzing the S&P 500 futures. Ticker symbol is ES. Currently, the March 2023 contract is ongoing. So what you're seeing here is the market profile view. So let's start with that. So last week on December 23rd, I had mentioned that I had posted a video that titled Santa Claus RALLY en route. So I was actually anticipating a big rally through the year end, but that didn't happen. So let's analyze what has happened. So last Friday's video, I had mentioned that above 3870 it's going to be bullish and below 3870 it's going to be bearish. So apparently it was a short week this week, only 4 trading days that had full trading hours. Monday was a holiday, but on Sunday overnight session and the Monday afternoon, like after market session, we had fully capped up, meaning the price rallied as anticipated above 3870, but then by the time on Tuesday regular trading hours open, we had almost opened around where price has closed last Friday. That was around 3870. So this is the Tuesday regular trading hours profile. Since we had opened around the same price as where we closed on last Friday, it was actually very choppy with a poor high and then closing within within last Friday's range. But then on Wednesday, we had a few weak levels that were formed on Tuesday that got repaired and then leading to a close below the balance, forming a new spike to the downside. And then on Friday, on Thursday, we had again gapped up. It was a pretty volatile week as always. Because it's the year end, so most big funds are adjusting their positions, so that's why you're seeing these big swings. So I wanted to highlight one more thing. So on Tuesday's high is exactly from Friday's high, meaning they both are exactly matching. So on Wednesday we repaired that in the morning session. As you can see, we went above that, repaired it, and then went back within Tuesday's range, and so we went to the other end of the balance, and then we had closed below the balance zone. However, the lower prices were not sustained because there were many weak levels that formed on Wednesday. So on Thursday we had gapped up, by about 30 points, as you can see here on December 29th, and then rallied straight up, and then we had some weak levels formed as well during that rally. And so today is Friday, we had a gap down but still opening within prior day's range. So we cleared those few weak levels that were formed here, especially the single prints from overnight session of Thursday. And then we still have some single prints from Thursday's overnight session which we didn't fill yet. But today was a pretty balanced profile. The shape of the profile is D, meaning the point of control and the volume point of control, on which you see on the right side. They both are almost around the mid of the session. So that's why I call it a D profile, the alphabet D for dog. So with that being said, what's up for next week? So next week is a new year. So the yearly candle closed today. So we have formed a spike into the close, meaning if you see a sharp rise in the price, there was a poor high in the beginning of the today's session, which later got repaired, forming a firecracker effect of that P profile, leading to a close near the high of the day. So spike rules are applicable, same as last Friday, but this time the spike base is 3854. So above 3854 it's going to be bullish, and these are the targets, and then below this it's going to be bearish. So I still think that the Santa Claus rally is going to come, because there were too many shorts in day before yesterday session that caused a sharp buyback in prices. So there are a bunch of single prints also on the top that needs to be filled. I still have them marked because they are not retested yet. They haven't been retested yet. So that's it based on the market profile view. Keep an eye out for the spike base. Above this it's going to be bullish, and you can, as you can see, the target above that would be almost reaching the other end of the balance, because we had closed back within the balance zone today, the Friday, December 30th. So above 38.54 you can buy calls or stay long, targeting 39.12 and beyond, and then below that you can target 38.22.25, which also coincide with almost the low of the day of today. That's it based on market profile view. So let's jump into the candlestick pattern view. So let's start from the top down approach, but this time yearly chart, because the yearly candle just closed today. So yearly, as you notice, we had closed within prior year's range. So that is going to be balancing. Balancing means choppy on the yearly time frame. Let's go to monthly. So monthly chart, the trend is up. The trend is up, being the high. We broke the high of November, and so the trend is up, but we closed within November month's range, so the trend is balancing. And then let's go to weekly. So the weekly chart, we stayed completely within prior week's range, and we in fact closed within prior week's range. So on weekly time frame also it is balancing. That means choppy action. Choppy means like up and down in the sideways price range. So let's go to daily now. So daily trend, so we are trading fully within prior day's range. So it's again a choppy sideways. We're going to be sideways until we break out of this daily high and daily low. So that's it based on the candlestick pattern view. To summarize, let's go back to the market profile view. 38.54, it's going to be the line in sand for the upside or to the downside. So above this it's going to be bullish, and below this it's going to be bearish. So above 38.54 you can stay long or buy calls. Below this you can stay short or buy puts on the S&P 500 index or SPY. Anything should be okay among those two. So with that being said, New Year is approaching. I wish you and your family a very happy and a prosperous New Year 2023. All the best, guys. Take care and have fun. Bye bye.